Hello, I'm Thomas. While studying economics, I co-founded Medium Invest, and for 12 years I've been fortunate to call my passion my profession. We have known for some time, just waiting for the news to finally break. Today it did, and now we are telling the story of Intellego Technologies, the alleged fraud hiding in plain sight, and how we went from investing to sounding the alarm for the first and only time in my 25 years of investing in stocks. This is recorded before the news broke, so at least for now, everything I say is alleged and solely based on the information presented in this video. You can view it as a tiny time capsule into what was knowable before the fact without the benefit of hindsight. We take care to be accurate, but there can be mistakes. This is not financial advice. We have no financial interest in Intellego. We are just the guys trying to do the right thing. We begin our story in 2019, 8 years after Claes Lindahl founded Intellego Technologies. At this point in time, Intellego have developed and patented some high-quality dosimeters that can measure the accumulated UV light they are exposed to. Dosimeters are basically hard pieces of paper that change color after being exposed to a certain amount of UV light. Unfortunately, the actual real-world use cases are slow to take off, and for the full year of 2019, Intellego Technologies made less than 1 million Swedish kronor in revenue, losing a couple of millions after cost, and had little cash left in the bank. You can roughly translate Swedish krona into euro or US dollar by dividing by 10, so 1 million Swedish krona is roughly 0.1 million euro or 0.1 million US dollar. Then 2020 comes around and everything changes. The COVID pandemic created the perfect market opportunity for Intellego, and revenues multiplied almost tenfold to 7.1 million Swedish kronor. In the summer of 2021, Intellego Technologies went public and raised 15 million Swedish kronor in new capital. Intellego started trading significantly below the IPO price, but fortunate they had lots and lots of business opportunities. And that might even be an understatement. In the first year of being publicly traded, Intellego sent out 28 company announcements and investor news on a number of different commercial deals spanning from letters of intent to distribution agreements and firm orders. All of these great commercial opportunities completely filled up Intellego's news flow to investors. The fantastic news flow of commercial opportunities made the share rally in the second half of 2021. The share price was very important to Intellego because they still needed more funding, and the IPO included warrants that could be subscribed for new shares in July 2022, providing more much needed funding to Intellego. If the share price was meaningfully above the subscription price in July 2022, investors had a strong incentive to exercise the warrants, send money to Intellego, and get new shares in exchange. If the share price was below the subscription price, there was little to no incentive to exercise the warrants, and Intellego was unlikely to receive the much needed funding. Unfortunately, despite ever more fantastic news flow about commercial opportunities, the share price started dropping and approached the crucial subscription price. In June, just a month before the subscription period started, Intellego had to release their first quarter report after an initial delay. As the pandemic subsided and the world went back to normal, Intellego's revenue dropped to just 0.33 million Swedish kronor in the first quarter of 2022. For anyone used to think in euros or in dollars, that is about 0.03 million, basically nothing. Intellego was in a very tough spot with limited funding and a struggling real business. Then, 1 week before the subscription period started, the unthinkable thing happened. The share price fell below the strike price of the warrants, removing the financial incentive to exercise the warrants and secure the much needed funding to Intellego. Intellego was quick to put out a press release, easing investors' concerns by highlighting how they are close to signing huge commercial deals that can propel their revenue to more than 100 million Swedish kronor. Also adding that they have alternative financing solutions in place in case the warrants are not subscribed. Intellego continued to put out several more press releases trying to shore up investor confidence and projecting confidence in the company by buying shares, among other things. I just want to highlight one other specific press release in this period. During the subscription period, Intellego secured 10 million Swedish kroner in alternative financing and saw good opportunities to become cash flow positive in the second half of 2022. This is huge news. Being cash flow positive proves the business model is sustainable and removes the need to secure additional financing in the future. In the end, half of the warrants was exercised, providing 10 million Swedish kroner in much needed financing. 1 month later, the financial report for the second quarter would show that Intellego was down to less than 1 million Swedish kroner in cash at this point in time. 2 days before Intellego was due to publish their second quarter financial report, they announced the acquisition of Dow Group, a company with revenues 8 times the size of Intellego at the time. Funding was not secure. Intellego had, despite their very best efforts, managed to only raise 10 million Swedish kroner, and now they acquired a company where the first cash payment was 3.5 million British pound, around 44 million Swedish kroner at the exchange rate of the time. 2 days later, the second quarter financial report was released with excellent news. The real business has bounced back with revenue growth of more than 300% to 8.8 million Swedish kroner. Intellego now had a real business again. Any reader of the financial report can only conclude Dow was not included in the financial numbers. The acquisition was listed as an event taking place after the end of the reporting period, and the report highlighted how the cash position would be boosted in the next financial quarter when Dow Group's cash of roughly 10 million Swedish kroner would be included in Intellego's financial numbers. And let's take a moment to appreciate how Intellego is framing everything in the most positive way possible. They had just barely raised half of what was possible despite pulling pretty much every trick in the book to lure in investors. Now they have huge unfunded commitments to the owners of Dow Group, but hey, we do inherit Dow's own cash pile. Guess we can pay them off with that. But still, the reported financial results are great. There's substantial revenue growth, finally proving that some of all of these amazing commercial opportunities is starting to translate into real business, undeniable revenue. Only it was not. Dow Group's income was included in Intellego's second quarter financial report, and Dow was driving the majority of the increased revenue. This should have been clearly disclosed in the financial report, but instead the financial report strongly suggested it was not, and the only place it was mentioned that Dow's income was included was in the original press release related to the acquisition. This is highly manipulative and in violation of section 4.1.1 in Nasdaq First North Growth Markets Rulebook and in violation of Article 7 of the EU Market Abuse Regulation. The acquisition of Dow allowed Intellego to put out more positive information, like this press release highlighting revenues exceeding 20 million Swedish kroner in the third quarter, an increase of more than 470% from the same quarter the previous year. According to Intellego, this growth is driven by their expansion efforts, whatever that means. It is, of course, mainly driven by the acquisition of Dow, not organic expansion efforts. An honest management would put that in plain text. This is less blatant manipulation because investors can now reasonably deduct that Dow is included in these numbers and driving the growth, but the framing is still a very, very optimistic version of the underlying reality. And in this period, some of the financial numbers that would allow an educated investor to deduct how much of the growth is organic and how much of the growth is from the acquisition of Dow magically disappeared in violation of section 4.3.1 of Nasdaq First North Growth Markets Rulebook. Quite the coincidence. I cannot speak to the intentions behind the actions, but if one wanted to deceive the world, this would be a clever yet very desperate way to do it. 2 days before the financial report is due, and remember, revenue in the previous financial report was just 0.33 million Swedish kroner, you announce an acquisition of a large, real business. You do not have the money to buy it, but if you are able to project success, you can secure the financing later. If you do nothing, you might expect to go bankrupt. If you think like a crook, you may see it as a free extra roll of the dice. Fake it till you make it. You need your investors to think your core business is doing good, so you include 1 month of revenue from the acquisition in your income statement. Including 3 months would make it too obvious something was off. By just including 1 month, it does seem plausible that it's your core business bouncing back from the weakness from the previous quarter. You do not include the balance sheet of the acquisition because that would also make it too obvious something was off. Obviously, you cannot do that. You do have to consolidate the income and balance sheet at the same time. You are breaking many rules, but maybe you do not care. And to get a tiny bit of plausible deniability, you put 1 line in 1 press release about including the acquisition from June 1st in your financial numbers. And again, I do not know the intentions behind Intellego's actions. This is of course unknowable to me. I'm just trying to connect the dots and tell the story, assuming one wanted to deceive the world. And the end result, when the acquisition was announced, the share price did not move. 2 days later, when the second quarter financial report was published, the share price jumped 35% in 2 weeks with some supporting insider purchases. You are now more likely to attract the financing you need to pay for the real business you just acquired. With all of the good news Intellego put out, they just about managed to get the financing of Dow Group in place in February of 2023, finally officially acquiring the shares. This is the time most companies would include an acquisition in their financial numbers, not months before the acquisition is even announced, let alone financed or closed. In the spring of 2023, cash was again running low, and despite all of the good news Intellego was able to communicate to the market, the share price stubbornly refused to rise. The news Intellego put out in this period showed how the commercial opportunities started to materialize into ever firmer, more concrete orders. However, all of the large firm reported orders was either from unnamed companies, very small companies with limited funding available, or Chinese companies which are difficult to externally verify. Then everything changed. March 23rd, 2023, Intellego announces preliminary strong organic growth of more than 6,000% in the first quarter of 2023. Seems like they understand what investors want. And only 34 minutes later, Intellego carries out a directed share issue, raising 11.7 million Swedish kroner in much needed funding, which mainly will be used to make another partial payment to the previous owners of Dow. This is huge news. Finally, the amazing commercial opportunities we have heard so much about ever since the IPO starts to materialize into organic revenue growth. And 1 month later, we get another preliminary update on the financials of the first quarter. Revenue growth and earnings strongly above previous estimates. The amazing news is now even more clear for everyone to see, with a growth of 12,800% in revenue, and perhaps even more impressively, a huge jump in profitability from negative 3.4 million Swedish kroner to positive 18.5 million Swedish kroner. Any doubters was proven wrong. The commercial deals had finally translated into real revenue and earnings, not driven by the Dow acquisition, but driven by organic growth in the core business of Intellego with amazing profitability. Well, either March 23rd, 2023 was the day Intellego made it, or it was the day they crossed the Rubicon and started fabricating revenue and earnings, allegedly. Investors were ecstatic. You can get away with a lot when it comes to hope, dreams and promises like distribution agreements, letters of intent and more or less firm orders. but hard revenue and earnings, not from acquisitions but organically from the real business. That is an entirely different story. It will be audited and you are likely to face serious legal consequences if you lie about it. In just a few months, the share price tripled and the cash started to flow freely from investors, including Medium Invest, to finance this impressive commercial breakthrough. This is the time we identified a potential exceptional investment opportunity. The fat pitch Warren Buffett talks about where you should swing big. The share price was increasingly rapidly day by day, and we quickly made an initial investment to get in before the undeniable commercial breakthrough was priced into the share. We were planning to invest significantly more when our research process was complete. At first, when we talked to experts and customers, we got good feedback. Customers did use Intellego's dosimeters, and it seemed to be the best product on the market. Later, we got more mixed signals and started connecting the dots, slowly realizing just how dodgy the communication from Intellego was. Finally, we concluded we simply did not trust Intellego, sold all our shares at a loss and filed a brief notification with Nasdaq, sharing our concerns, which was pretty vague at the time. We also owned some warrants which turned out to be in the money when they expired in the summer of 2025. We briefly reviewed the investment case again and was pleasantly surprised to see the impressive audited financial numbers. However, it still looked too good to be true to us, so we exercised the warrants and immediately sold the shares. Our net results were basically zero, with a loss on the shares and a profit on the warrants. Then, one late Saturday evening 2 months ago, I was working on an educational YouTube video on the slippery slope from justified optimism to fraud. I was debating myself whether it was moral to include Intellego as a case study. I wanted to include it because I found it to be the most suspicious company I've ever researched. However, I believe in praising by name and criticizing by category, as Warren Buffett puts it, so it was no easy decision. In the end, the question turned out to be moot, because as I was researching Intellego that evening, I realized Intellego had to be fabricating the numbers. I spent the night compiling a comprehensive whistleblower report on Intellego and handed it over to the regulator the very next morning after getting some sleep and having the report and conclusion reviewed by our team. We did not have a smoking gun, but that evening I connected the dots and could only come to one logical conclusion, that Intellego must be fabricating the numbers. We knew the regulators needed more than just circumstantial evidence to act, and they would have to do their own investigation before they could intervene. What did I realize that late Saturday evening? Let's return to our storyline back in the summer of 2023, because the good time was not to last. In August of 2023, the journalist Sven did some excellent investigative work and revealed that the CEO of a customer denied any knowledge about a large order worth minimum 60 million Swedish kroner that Intellego had previously announced. It was a bloodbath on the financial markets. The share price of Intellego was cut in half, but it turned out to just be a simple mislabeling mistake. The customer was not American Radical Clean Solutions as originally stated by Intellego, but their international distributor, Radical Clean Solutions International. And after Intellego got to explain the innocent mistake, the world moved on. Let's take a moment to appreciate that in the history of business, this must have been one of the most spectacular ways to lose half of your shareholders' money overnight by a simple mislabeling mistake. What I realized that late Saturday evening is there's just no way this order is real, even if confirmed by Radical Clean Solutions International. The order had a minimum value of 60 million Swedish kroner over a 3-year period with a sales forecast of 150 million Swedish kroner. Radical Clean Solutions International at that time was a distributor of air cleaners with a yearly turnover of about 7 million Swedish kroner, a gross profit of about 0.3 million Swedish kroner, and a balance sheet totaling 1 million Swedish kroner. even if Radical Clean Solutions International somehow confirms the validity of the order. I simply cannot come to the conclusion this is a good faith business transaction, with a company reselling air cleaners with a yearly gross profit of 0.3 million Swedish kroner, committing to buy a minimum 60 million Swedish kroner worth of dosimeters that can measure UV light, completely unrelated to their current business, and with a projected sales forecast of 150 million Swedish kroner. It just makes no sense. And basically, that is it. How we think the numbers have been fabricated for years. Business relationships, orders and invoices that, even if confirmed by the counterparty, cannot be real, generating huge amount of revenue that simply cannot be booked as revenue with the proper application of common accounting principles. The most recent example being the 233 million Swedish kroner order announced in October 2025 and predated to late September 2025, likely to make the financial numbers promised to the investors. We will go into much more detail of this order later. I am going to spare you for the details of the many other shady deals and leave it for the investigators to figure out how some counterparties confirm these invoices. I'm not alleging any wrongdoing on the counterparty's part, but someone should clearly look into it. And the image of huge commercial success not only attracts much needed external funding, but also creates real business opportunities. Success breeds success. Potential partners are much more likely to engage with you if you are a huge commercial success and everyone seems to want your products. The DAO business is real, and some fraction of the core Intellego business is also real, and I think this has cleverly been used to lend credibility to the fraud. And let me show you how with two examples. In February this year, Henkel and Intellego announced a global collaboration for the PSA market, aiming to formally sign an agreement in the near future. This collaboration was confirmed at the time by the pesky journalist Sven, doing real great investigative work, who reached out to Henkel and got confirmation the collaboration is real. And I want to stress, I am certain Henkel has no involvement in this fraud in any way. In the first quarter financial report published in May this year, Intellego claims the collaboration is developing better than expected and the agreement is still about to be formally signed shortly. Then in the second quarter report published August this year, Intellego again claims the collaboration is developing better than expected. Intellego has to admit that the distribution agreement, which previously was expected to be signed shortly, was not yet signed, but we are to believe that this is somehow not important because they are focusing on selling the products in the market. If you know how big businesses work, you know how likely this is to be true. Moving on to the third quarter financial report published in November. This slide is deliberately blank because there is no mention of Henkel. What a surprise. At this time, Intellego has been on a short attack for months and the fraud is starting to crumble. My best guess is Henkel smartly decided, nope, we want nothing to do with this. Moving on to the second example. All the way back in June 2024, Likang and Intellego signed a deal with a minimum value of $16.2 million over a 3-year period with deliveries and payments starting immediately. I'm going to ask you a question about this in a minute, so if you want to, pause the video and read all of the details. Then in November of 2024, the collaboration is expanded in size to minimum volumes of $360 million tied to the exclusive sales and marketing rights. Again, pause and read the details if you want to. Then in March of 2025, the collaboration is expanded again, covering more countries in a new $360 million to $1.4 billion deal. Again, pause and read the details if you want to. Then in the first quarter financial report published in May of 2025, Intellego highlights the collaboration with Likang is developing better than expected. Then in the second quarter financial report published in August 2025, Intellego again highlights that the collaboration with Likang is developing better than expected. And now let me ask you the question. Based on the communication from Intellego, how do you expect the collaboration with Likang to be today? Almost a year and a half after the deliveries and payments started with the first order worth minimum $16.2 million over a 3-year period. Because I think we got the honest state of the collaboration when the board of directors responded to speculation and misinformation in media and on social platforms. Pause the video if you need more time, and otherwise, let's get to the truth. October 2025. Intellego's products are currently in use with several larger hospitals in China. Several, that is 3, 4, maybe 5, and larger, that means not small ones, but also not large ones. So maybe 4 medium-sized hospitals. What did you expect? And since this is the story that never stops surprising, I have to add a new chapter, because now this LinkedIn profile, allegedly the CEO of Intellego, is spreading what I can only see as insider information through LinkedIn. So maybe Intellego's products are in use with 4 medium-sized hospitals in China, or they are in use with over 1,000 hospitals in China. As you would expect if the revenue was fabricated, the financials are highly suspicious. Cost of goods sold is very low, and it needs to be, because otherwise the lack of cash would cripple the business very rapidly. Other operating costs are also surprisingly stable for a company with growth this high, and again it needs to be. That means the operating margin is very, very high, but of course that does not translate into real cash flow, and that has been a big problem all the way back since 2023, when we think Intellego started fabricating revenue. The earnings have been building up in accounts receivable, essentially unpaid invoices, and fixed assets ever since. While the cash and cash equivalent position has been very low despite an ever-increasing flow of external financing, reaching just 4 million Swedish kroner in cash in the first quarter of 2025 after 2 years of amazing earnings. And the accounts receivable, which look very bad at a glance, turns out to be even worse if we dig into the numbers. If we take out the real DAO business, correct for credit losses, it looks a lot worse, and there is a huge difference between the real DAO business with paying customers and the core Intellego business without paying customers. Recently, Intellego found a way to partly address the cash flow by using factoring, selling the invoices and getting cash in hand today, effectively converting accounts receivable to cash. The lack of cash flow has been a major concern for years, so improving this number can really move the share price. We suspected Intellego used factoring to improve their cash flow, and in their third quarter financial report they finally admitted to it. There is nothing inherently wrong in using factoring, but not disclosing the use of it and just pretending your accounts receivable are getting better is deceitful. Just like acquiring a company, not properly disclosing that you include their income in your financial numbers and pretending your core business is doing great is deceitful. Now, there's plenty of more suspicious information. The number of employees, DAO Group, the real business, has 55 employees. At least that's a very educated guess based on Intellego's annual report, since DAO Group is located in the UK. And the core Intellego business is only 7 employees and is generating the vast amount of the revenue and the vast amount of the earnings. And there has been a high turnover of key personnel, especially on the Chief Financial Officer role. The geographical mix of revenue is wildly fluctuating, and there has been many suspiciously timed insider purchases and press releases of amazing insider information at the most opportune moments, just when the stock price was going down due to other real bad news. And ultimately, before the scam was exposed, the size of the fabricated revenue had ballooned to something like 5% of the entire global industry. And that is the UV industry in all applications, all equipment, and Intellego is supposedly selling a cheap consumable with alternatives. They have competitors. Sorry, there is just no way. And when we connected the dots, we immediately sounded the alarm and did everything possible to stop this tragedy. A lot has happened since. The share has come under short attack and a lot of clever analysis has been put out in public. We largely concur and we are not going to repeat what others have already said. But there is one last thing we do want to cover, because on November 10th we could finally mathematically prove it. In September 2025, as Intellego reached a peak valuation of more than 6 billion Swedish kroner, the pesky journalist Sven again brought the good times to an abrupt end with his great investigative work, revealing 2 key employees had left Intellego and the share price dropped 17%. Like clockwork, Intellego was able to publish excellent insider information the very next day, surpassing 400 million Swedish kroner in EBIT year to date. The same pattern we have seen again and again and again. But this time it can be mathematically proven to be false. The announcement of EBIT surpassing 400 million Swedish kroner must be fabricated based on simple math and Intellego's own financial reports. You can check out all of the details and the math on this slide. First, when the order was announced, the wording strongly indicated the order would follow normal revenue recognition, meaning it would be booked when the equipment was shipped in the future, meaning the fourth quarter or later. Second, revenue recognition was changed to EXW terms, which allows revenue to be booked before the equipment is shipped, and we are told the order was received late September and thus is included in the third quarter financial numbers. You have to announce insider information like this order to the market immediately. We are told the order was received late September, but only announced in October due to internal governance and compliance processes. Third, the announcement of EBIT surpassing 400 million Swedish kroner year to date was published September 12th, the day after the share price sank 17%. Late September can only be after September 12th. Fourth, mathematically, we know Intellego could only have surpassed 400 million Swedish kroner in EBIT if the order is included. Without recognizing the revenue from the order, it is mathematically impossible for Intellego to reach 400 million Swedish kroner in EBIT. And I have yet to see revenue recognition principles that allow revenue to be recognized before a customer places an order. So there really is no comeback from this. And put very simply, the 233 million Swedish kroner order was announced in October with wording that strongly suggested it would be recognized in the future, meaning the fourth quarter 2025 or later. When the third quarter financial report was published, revenue recognition was changed to EXW terms, allowing the order to be recognized in the third quarter, likely to make the numbers promised to the investors. But even if we allow for this, we know mathematically Intellego could not have surpassed 400 million Swedish kroner in EBIT year to date on September 12th when they announced it one day after the stock price sank 17%. It simply is mathematically impossible. It must be fabricated. It has been a long, slippery slope that has now come to its only logical, sad conclusion, And now the news is out, we are sharing our story. Since we did briefly own Intellego before becoming whistleblowers, we realized we cannot stay silent, and if we are going to share, we might as well do it right away. We had all of this video pre-recorded, so this is our honest analysis without any benefit of hindsight. Since we were certain Intellego was a fraud, shorting the share would be the financial equivalent of earning free money. We made no money on our discovery because shorting is not part of our professional investment mandate. Privately, we could have scrambled to earn as much money as our brokers would let us short. However, it just felt wrong to profit privately without our investors in a situation like this. We are certain we will be happier staying true to our moral compass rather than earning millions privately on a situation like this. So instead, we scramble to stop this tragedy as fast as possible. And it truly is a tragedy. This is not just numbers on a screen jumping up and down. This is the real world. Lots of real people have lost real money. Some may have lost more money than they can afford. I feel for everyone who have lost money on this fraud. This is not how the financial markets are supposed to work. I think the pesky journalist Sven deserves praise for excellent investigative journalism. He has had to take significant heat on social media for doing his job very, very well. On a personal level, we feel the pain of the situation. But professionally, we are proud we were capable of pivoting from thinking we found the best investment of the year to thinking something was off and warranted further investigation all the way back in 2023. No confirmation bias, just good research, clear logic, and common sense. Professionally, we are also proud we connected the dots and sounded the big alarm this year. When the dust settles, we think the most important question for society is not the fabricated revenue, the lies, and the manipulation. That makes for great headlines, and we can all agree that is very wrong. We think the most important question is what happened all the way back in the summer of 2022, just 1 year after Intellego went public, and when they raised money through their warrants for the first time after going public. We may never know if Intellego's communication at that time was honest, and that is precisely my point. That is the part of this history which will repeat itself over and over again. Not exactly in the same way, but roughly. History does not repeat itself, but it rhymes, as Mark Twain allegedly put it. Today, legitimate companies need funding and want to attract investors. The better the story they tell the investors, the more likely they are to attract financing at attractive terms, and if we are not careful, that can be their first tiny step down the slippery slope. Luckily, the vast majority is good, honest managers with a healthy belief in their own abilities and the future of their company. And with that, I'll leave it for the investigators to fill in the blanks. We will follow up at a later stage, but for now, take care and use common sense.